Indian markets faced a bloodbath today. Nifty tumbled below 24,750, Sensex sunk nearly 850 points, and midcaps saw heavy selling. What triggered this crash? Let's break it down. The United States had already announced a sharp hike in tariffs on Indian imports, and the move will officially take effect from midnight of 27 August. Export-focused sectors such as textiles and chemicals are bracing for impact, with profitability likely to come under pressure and concerns mounting over India's near-term growth outlook. Benchmark indices continued to weaken, with the Nifty 50 slipping 1.02% and the Sensex losing 1.05%. The broader market saw sharper cuts. Nifty midcap fell over 1.5% while smallcap dropped more than 2%. The sell-off underscores investor worries over the looming US tariff impact on export-oriented industries, weighing heavily on overall market sentiment. Sector moves were a mixed bag. FMCG bucked the trend, rallying nearly 1% even as PSU banks and metals slipped 1–2%. The hardest hit were capital markets and real estate, tumbling over 2%. This sectoral divergence shows how US tariffs are shaking markets unevenly, with some pockets showing strength while others face heavy pressure. Stock action was mixed. Shriram Finance and Pharma topped the losers list, while Eicher Motors and HUL emerged as key gainers. Vodafone Idea nosedived 10% on fading hopes of government relief, even as Maruti Suzuki jumped nearly 3% after unveiling its e-Vitara. These sharp moves underline how US tariffs and shifting sector dynamics are reshaping market sentiment. The sell-off was fueled by a mix of global and domestic pressures. US tariffs, profit booking, and heavy FII outflows dragged the indices lower. Adding to the stress were a weakening rupee, falling global markets, and crude oil climbing to a 2-week high. Export-focused sectors like textiles and chemicals remain the most exposed, keeping overall sentiment on edge. Currency wars added fuel to the fire, with the Indian rupee slipping 10 paise to close at 87.68 against the US dollar. This weakness amplifies the pain from US tariffs, stoking fears of rising import costs and squeezing corporate earnings. For sectors heavily dependent on foreign trade, the double hit of tariffs and currency depreciation is keeping investors on edge. Global cues added to the pressure. The Stoxx Europe 600 and MSCI indices slipped, while US futures also traded in the red. With global markets mirroring India's downturn, the tariff shock only deepens worries for export-driven sectors. In this already volatile environment, investors fear rising headwinds from both domestic and international fronts. The US tariff shock has clearly rattled the Indian equity markets, with export-focused sectors taking the hardest hit. For investors, this is a reminder that proactive strategies and timely portfolio adjustments are key to navigating uncertain times. That's all for today's analysis. If you found this update useful, don't forget to hit the thumbs up sign like button, share it with fellow investors, and drop your thoughts in the comments below. And of course, subscribe for daily market insights.